I'm joined by Jeff Mills. He's Chief Investment Officer at Bryn Mawr Trust, and Jimmy Pethokoukis, Economic Analyst at the American Enterprise Institute. Both of these gentlemen are CNBC contributors. Jimmy, I guess I'm going to start with you just to give us kind of the lay of the land and how you think everything shook up last night. So I understand Mr. Sanders won, but by a relatively narrow margin. So what does this mean going forward? Biden's already moved on to South Carolina. What's happening here? Who's going to be the Democratic frontrunner?
Well, what happened was that we had a front runner who, as it turns out, is really bad at running for president. I don't think Joe Biden's ever done better than about a fourth place finish in a primary. He looks like he barely has a pulse, and we have a very weak front runner in a very fractured field. And listen, if you were going to come up with a scenario where somebody who has unlimited money to spend can jump in, shake the whole thing up, maybe win, maybe create a brokered convention next summer. That's exactly what you're seeing. You mentioned Mike Bloomberg at the end. I don't know what his scenarios were that he ends up as a Democratic nominee, but they couldn't look much better than what's happening right now.
And so, Jeff, now that we hear everything Jimmy has to say, and he's talking about a fractured field, I guess it's a little hard for investors to sort of make some their bets with their money. But if it is Bernie Sanders, I mean, you couldn't be further different from the situation we have right now in the White House as far as economic policy is concerned.
Yeah, no question. But I think the market has it about right. You know, it continues to levitate even as Sanders has risen in the polls. But I think the bottom line is that no president has lost re-election when they've avoided a recession in the 2 years prior to that re-election bid. So, you know, in my estimation, you have a bottoming of global manufacturing. It looks like leading economic indicators are inflecting higher. If you look at earnings as an example, usually guidance for 2020 at this point in time would have been down by about 1.4%. Guidance is only down by about 4% so far. So fundamentally, things look good, which means we likely avoid a recession leading into re-election. So I think investors are looking toward another President Trump victory here. And usually when the incumbent wins, on average, the S&P 500 is up about 10%. When the incumbent loses, usually up about 3%. So a big gap there. But if you're playing the odds, it looks like a reasonably good scenario for markets. And I think that's how investors are acting at the current time.
Yeah, you know, I mean, polls show that or suggest, that Bernie Sanders can beat President Trump. A lot of investors look at those betting markets. Those betting markets have Trump the favorite. And even if Trump should lose and you have a President Sanders, we're not going to get a wealth tax probably unconstitutional. We're not going to outlaw all private insurance companies. So I think they're looking at, it's an unlikely scenario that Bernie Sanders wins. It's even more unlikely scenario that we go hashtag full socialism.
And Jeff, as you follow along, you said you gave us some stats there about what happens when incumbent presidents win, and then if they lose, the S&P 500 is up about 56% since Trump has been in office. I mean, but what would markets say about sort of looking at this very fractured field? I guess I'm still just not convinced that the markets are going to behave the same way if the candidate is Bernie Sanders versus if the Democratic candidate is, say, Mike Bloomberg.
Yeah, look, I mean, Jim mentioned it, right? If you look at the national polling, I think Sanders is ahead of Trump by something like 4%, and that gap has actually widened a little bit. So I do think that even if it's just for a period of time, investors may need to react in a way that, supposes that there could possibly be a Bernie Sanders president. So I think it could cause volatility in the near term. And honestly, I've been surprised that the catalyst the markets have been given thus far, whether it's coronavirus or Sanders surging in the polls, hasn't done more to shake the markets. I mean, if you look at what's going on right now, you've got the top 50 names in the S&P 500, some 13% above their long-term moving average. If you look under the surface, there's some breadth deterioration. So we had 80% of names above the 50-day moving average, now only 60. So I think in the near term, whether it's the coronavirus, whether it's something in politics, the market could shake a little bit. But I do want to make it really clear, I think that's more of a very short-term prediction. I think if you look out ahead, it's just difficult to be too negative on a market where the liquidity backdrop is what it is via what central banks are doing. They continue to stand at the ready. And like I said, I think fundamentals on balance are actually looking better, not worse.
Jimmy, looking forward as these primary contests roll on, do you think we're going to continue to see such a fractured field, or are these campaigns going to start to pull together and voters start to sort of aggregate towards one candidate? Or is this just the way it's going to be until we get to, like you said, the possibility of a brokered convention?
Yeah, listen, I think if there wasn't a Mike Bloomberg sort of looming out there, you'd say at some point, listen, Sanders has, he's won the votes in the caucus and the primary. The next couple of states look much better than him. I mean, he kind of, in a normal situation, he kind of should be the Democratic nominee. People don't believe it because of his age, because of the socialism tag, and because we have this age bomb of money about to explode in this primary over the next few weeks. That's why I think this is still going to be a very topsy-turvy field for quite a long time.